Hi everyone, Joe Kehrig, Managing Broker of Coldwell Banker Real Estate in Danville, and welcome to your San Ramon Valley Real Estate Update, the week of June 22nd. Well, as we've been talking about for the last couple months, I thought we were going to be in a V recovery, but it's not even a V recovery. It was just basically the real estate market just paused. In February, we had our best February in 13 years as far as sales and activity. So what's really happened is this is really our spring market. So June 1st for us was just like March 1st was starting out to be. So let's look at the first graph. You can see the Housing Market Recovery Index. Now this is put together based on 4 criteria: housing demand, home prices, housing supply, and the pace of sales. So you can see right after February, if you use February 1st as a baseline, right after February going into March, it was 106.5%. And then of course the COVID-19 hit, and you can see it went down and down and down and up. Now look what happened starting May 1st. You can see it's gone up, and we're up to, like, when we started June 1st, 90%, and we're going to be back up there shortly. So really, we're in our spring real estate market. It wasn't really even a V shape. It was just literally, we just paused for 3 months, 4 months, and now we're just starting over again. So let's look at another graph. So new listings on the MLS beginning to return. Again, you can see what happened all the way through February. It goes up, 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 and then obviously down, 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 down as people did not want to put their home on the market during the time, and for good reason. In a lot of cases, you couldn't even show a home if it was occupied. But now look at it where we are now. We're still minus 16% in inventory, even though the market's very active. Because look at this next graph, housing supply year over year. You can see in May, you have last year, you can see we had a pretty balanced May and June, a pretty balanced housing supply. And look what happened all the way through July, all the way through April. And obviously, as we see, a lot of homes pulled off the market in April. But now we're starting to build up a little bit. As you saw, as of a couple weeks ago, we're still minus 16%. This is one of the reasons that I don't feel that the market's going anyplace, at least for months, because you're dealing with interest rates, in some cases below 3%, and we are still have a lack of inventory. There's still not enough homes on the market, and we're seeing it getting worse and worse and worse. So let's get into another graph. Look at this one. This is the median price of existing home sales, and this is what I always tell people when they go, this goes all the way back to the fourth quarter of 2016. The real estate market will always have its ups and downs, but what I always tell people, go up and down, up and down, up and down. But when you look at it over a period of time, you're always going to see this. So that's why people want to buy real estate. It's a great investment. Do people lose money? Absolutely. But usually people lose money when they have to sell. Because if you don't have to sell and the market goes down, then you're just not going to sell. You're going to keep it. So anyway, you can see the home prices are continuing to go up. So let's look at the market. So where's the market going? Well, we're following the same pace, and as you remember, I talked last week, we had a pretty even demand. We had the pending sales were going up and up and up, but the active new listings were kind of keeping pace. Well, now what we're starting to see is we're starting to see this turn back to that February seller's market. And look at it. I mean, active sales in San Ramon, down, down, down. And look at the pending sales to the point now when you get that inverted graph where you have more pending sales and you do active properties available, that's where it starts turning into a seller's market. So again, we're seeing, still the nice part is there's still a lot of pent-up demand with homes coming on the market. Thank God, because they're at least giving us some inventory to work on. But we're seeing, if you look at the graph, it is changing. Pending sales are going up and listings are going down. So if this follows for a couple more months, we're going to be back right where we were in February, where there's like 3, 4, 5 offers on any decent home. Not all homes, because some are overpriced, they don't show well. But if a home is nice and priced right, In February, everything was selling at asking price or more than asking price. And that's where we see the market going. Now, where is the market going to go from here? Well, I see it being this strong for 3 to 4 months. Now, once we hit October, November, and we get into that nasty election cycle, definitely things will probably, even out a little bit. But still, no sign at all that interest rates are going to go up. They're going to stay down, maybe go down a little bit more. But for the most part, I mean, it's 3% or less, for a conforming loan. So you can see San Ramon's market is still very strong. Let's look at Danville. Very similar situation. Look at the pending sales the last 3 weeks. Up, up, up. And the active properties are staying pretty consistent, which is great, because what we've seen the last 3 weeks and what we've talked about is it's a pretty even market. Things are selling at asking price, but at least there's enough inventory to choose from. So it's a great time to be a buyer because, you're going to pay asking price for a nice home, maybe a little bit more, but you're not getting into a bidding war and just any crappy home is selling for a lot more than asking. So it's still a good time to be a buyer. And obviously with the activity, it's a great time to be the seller. Prices have never been higher than they are right now, even going back to February. So the Danville market is very, very strong as you see it. The Blackhawk market, now you see here, and that's what happens when you get into a more expensive market, because real estate, as far as pricing and affordability, it's like a pyramid. So at the higher prices, there's not near as many buyers, but as the prices drop, it widens out and there's a lot more demand because there's a lot more buyers out there. So you would definitely expect to see this like what we have in Blackhawk in a more upper end market. But still, this is a very strong market. You can see that the actives are staying pretty consistent. The pendings are staying pretty consistent. So again, I would call this a strong, stable market, but definitely not trending to a seller's market like San Ramon and Danville, where the price ranges are a little bit less. Same thing in Alamo. Now, the one thing in Alamo that you'll see, again, a lot less pending than active sales. That's, again, because of the price range. I mean, you have average prices at $2 million and above in both Blackhawk and Alamo. So when you look at this, though, but here's the difference, is look at the pending sales and look at the active properties coming on. So you can see that we're trending towards that inverted curve where it starts turning into a seller's market. So anyway, the Alamo market, that's a very strong market. Again, still a good time to be a buyer, but a great time to be a seller also. Now, if you're a buyer and you're sitting there going, I'm going to wait on this market, I will tell you, I mean, there's no end in sight. Now, will it change? I've been doing this for 42 years, so I've seen the cycles. Of course, we're going to have a correction, at some point. But usually what happens around a correction is, interest rates will go up and slow down the market. That's what happened in 2019. 2018, the market was really hot and they raised the interest rates and it flattened out the market. And then the government came back and said, sorry, just kidding, lower the interest rates back down. And then we started on this thing in, the end of 2019 going into 2020 with these unbelievable low, interest rates, which are pumping up the market. So the combination, if you're a buyer, don't wait. I mean, yeah, a market's going to go up and down. But I will tell you, with the low interest rates and the lack of inventory, and this lack of inventory isn't going to change tomorrow because the regulations to build homes and how expensive it is to build homes, we are still, as a country, we're $1 million to $2 million homes under what we really need to be. So you can see the Alamo market is still very active, a good market. I was asked to, I got a lot of requests to put Dublin in. Not quite the San Ramon Valley, but we call Dublin, Pleasanton, the Tri-Valley, along with San Ramon. So San Ramon's both in the San Ramon Valley and the Tri-Valley. So Tri-Valley being like Livermore, Dublin, Pleasanton, and San Ramon. San Ramon Valley is San Ramon, Danville, Diablo, Blackhawk, and Alamo. But here's the thing is, in all the areas that we're looking at, Dublin has an average price of just below $1 million. So out of all the neighborhoods we're looking at, all the cities and towns, it's the lowest, average price. That's why you see a market like this. Look at last week. We went from, so you got 99 pending sales and 92. So active property. So it's definitely trending to be a seller's market because again, it's that pyramid where as you go down in price, you have a lot more buyers. So again, a very strong market in Dublin, trending obviously towards being a seller's market. But still a good time to be a buyer because you can see still a lot of inventory out there. So list price versus sold price, pretty consistent. Again, when you get into the more expensive areas, you normally will see a lower price, just because of the price, a lower percentage of what they sell for. But look at San Ramon and Danville. I mean, that's been trending 98, 99, 100% for really the constant time that we've been in this, recovery. And then Blackhawk, is a little bit lower. But again, remember we talked about you can show me any place in the United States, show me the active and the pendings, and I'll kind of tell you where the market is. Well, we saw in Blackhawk, out of all the areas that we looked at, had the least amount of pendings compared to active properties. So that means it's a little bit more trending towards a buyer, which means a buyer is going to be able to negotiate a little bit better price, and hence that's what you see, 96, 94, 96% the last few weeks. And then Alamo's, the one thing about Alamo is, because things are over $2 million, there's only a few pendings every week. So it's hard to gauge because you have one sale that sells for $100,000 over asking, and it's going to, wipe out the statistics a little bit. But Alamo's a very desirable area. Less inventory, as you saw. Alamo was trending to be a seller's market, but not quite there yet. And you can see almost 100% of asking price. And then Dublin it's amazing. Last 2 weeks, Dublin's basically hit right on the spot. Everything's selling for 100% of asking price on average. Obviously, a few places sell less, a few places sell more. So very, very strong market. So obviously, even within every town and city, every neighborhood's a little bit different. Please don't hesitate to reach out if you have questions on your particular home or your particular neighborhood. And you can always reach me at cell number 925-487-6838 and our joe.kehrig at cbrealty.com. Again, I'm the managing broker of Coldwell Banker Real Estate in Danville. And as always, I can't wait to see you next week. And may God bless you and keep you and your family safe. See you next week.